What is good, guys? It's Rey-Jay back with another video, and in this one, I'm going to break down what's going on with Tesla, SPY, and a couple of other tickers. I'm going to break down what's going on with the economic calendar thus far and some very important things about the charts, and then give you guys an analysis about how things are looking. But before I break anything down all this information, before I get into any more details, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. SPY was down about 0.29% for the day. We have two red closes in a row technically, and this could be signaling that the market might turn a bit, especially since we got a break out of our rising wedge. But looking at the data, I just want to call out a couple of things before I break down the chart. So please note that for Friday, which was today, the Chicago PMI report was below expectations. This is very, very important. This was a drop right now, showing some contraction in the economy. And that's once again very, very important. That's what it says right here, contraction in December. And that's once again a big change that we're starting to see. So with contraction in the economy, this was negative, and this is one of the contributing factors as to why the market slowed down. But then as a reminder for Tuesday, okay, we also have the S&P Global Manufacturing PMI. So if this is another PMI that shows weak data, this could be negative for the markets, but we'll just have to wait and see. The reason why I'm saying it's going to be on Tuesday is because, the market's going to be closed on Monday for the new year. The year just flew by. It's already time for 2024 to be coming. There's going to be no trading on Monday. So please remember that, no trading on Monday, which means that with no trading on Monday, we're going to have more time to just spend time with our families and do other things like that. The market's going to be back on Tuesday instead. So that's once again pretty much awesome. We'll be back on Tuesday to talk about the market open. But when it comes to other things, I just want to call out something very important. When it comes to SPY on the options chain, you'll notice that today, let me zoom in using the 5 minutes time frame. We basically got an aggressive sell-off after the PMI data report came out. Just like this, a very aggressive sell-off after the first about 20 or 30 minutes. We came down to 473.3, which was one of the things we were expecting to be starting soon before the buyers came back and defended, and we ended up closing kind of red, but we weren't actually that low. They got us to close just barely above 475. I think the reason they did this is because of the options chain. So we had a lot of puts expiring. If you actually look at this chart, we had just under or very close to 900,000 calls expiring. Actually, a little bit more than that. And then on the put side, we had just under 1.8 million. So a 1.97 puts to call ratio. Max payment was at 472, but we just closed barely above it. So that's why they held the market up a little bit more. But looking at the current option chain as of right now, if you look at the option chain, check this out, guys. There's nothing crazy going on, I would say, for many weeks until we get to the third week of January. And what I mean by this is look at the amount of options we have. So we only have like 120,000 calls on January 2nd and about 140,000 puts, which isn't really that much of a difference. A 1.18 puts to call ratio, 1.3, 1.24, 1, 1.39. You guys get my point. The puts to call ratios are going down now, and we're not seeing as many puts or as many calls as before. We're not seeing an overwhelming amount of puts, which means that the market makers could still benefit from having the market drop. So that's a big shift in the option chain I'm seeing on SPY, because like before, every single Friday it would be like this, where we have high puts to call ratios. Most people had puts. Starting in January, for the first 3 weeks as of right now, it's not really like that. They're just like, it's almost 50-50 in terms of puts and calls until like January 19th. That's when things change. So there could be some room for downside thanks to that. And then you can't forget about the fear and greed index. Right, still at extreme greed. Be very careful. When people are way too greedy, that's the time you have to be a little less greedy, more fearful. This is the time you have to be a little bit more careful. Market momentum, excuse me, market momentum is still on extreme greed. We're seeing the put and call position at extreme greed, which tends to mark tops. So I wouldn't be surprised if we see the market kind of cool back just a little bit, just for the time being. And that's very important to note. So how do I think this is going to play out? So let me now break this down. So on the 4-hour time frame, you could see that SPY is looking a little bit weaker, right? We're going to likely test the 50 EMA. So I could see us retracing to the 472s again. We're looking a little bit weaker in terms of momentum. And, the market held up for the end of the year. we have a triple bearish divergence that's starting to develop, which suggests that there could be more downside. So there's going to be a risk of that, in my opinion. I also want to add that on the daily time frame, we had two red closes simultaneously. We actually had high volume selling right here on SPY if we look at the daily. And we had two red days technically in terms of the candlesticks. We're about to get a bearish cross on the PPO as well, finally. So the last time this happened, it was like right here. SPY was at 457, came all the way down to about 452, then it bounced. So it doesn't mean just because we get this signal, it does not mean SPY has to crash all the way down to like 450 in January. It could just drop a few more points, and we're just going to take this a few points at a time because I learned a very valuable lesson about how crazy the market is. Take it a few points at a time. Don't just be chasing after like 20 points to the downside, 50 points to the downside in a very short period of time. I tend to talk more about like shorter periods, like a week out. So we're going to be looking for our next support to be tested at 472, then 470. I could see a little bit more downside. If we lose that support, the daily 20 EMA at 467 is going to be coming next, and we can just drop from there. So to clarify this in terms of levels, just to clarify, guys, if you want to be bullish on SPY, you want to see this thing basically break 478. If it does so, we could push for 480. If you're bearish, you want to see it lose 474 and close below that. We're going to be looking for a push down to 472, then 470. What do I think about the chart, though? And here's the thing about it. So when I zoom in a little bit more, you will notice that we had a very interesting structure right here. We had this rising wedge, right? We were talking about this for many days. I warned you guys about this rejection that could be coming. But look at the structure in this. We had higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And then after that, since Thursday, SPY has been stuck back and forth and back and forth and back and forth. This is forming like a triple top like formation. And you could see it kind of struggled to break out of this resistance in the 477.5 zone. So we had some tight resistance, lots of consolidation, and the move has failed thus far. That's one sign of weakness. But I need to see more data for me to turn even more bearish if I want to turn bearish. So we got this break from the rising, which I told you if we got this break, anticipate some downside. The downside came, right? We got this move. We established a lower high technically, but the question is this going to be a trap? Do we push back up for next year one more time? Or are we about to get a follow through move to establish a lower high? If we break the low at 473.3, then the downtrend is going to be confirmed, and we're going to be looking for a move back down. I would say towards 470. So we look bearish. I think there's a very good chance it's going to drop more, but just to be safe, it's always important to watch your levels. I anticipate some more downside though, just by looking at the trend and how overbought we were in the triple bearish divergence. We haven't quite met, let me just show you this, our 0.618 retracement at 471. We haven't really met that yet, or even the 0.5 retracement at 472.5. From a Fibonacci standpoint, we basically tried to hold the 0.382. Haven't quite gotten there yet, so there's likely going to be more downside coming. So going into next year, I think that SPY could see a little bit more downside. It might cool off at least into the 470 to 472 area. And then we're going to be watching to see how it goes from there. Now, what is my view of the market in general? I'm not going to go over very specific levels, but let me just tell you guys the truth. I think that for 2024, during the first half, there's going to be another correction coming. I think that it's just going to be another buying opportunity because of the recessionary fears, the recession that's coming, the high interest rates and such. So I think that starting in January, we're going to see some pulling back, but sometime during the first half of the year, whether it's by February or March, we're going to see SPY actually retrace quite a bit. And I think we're gonna start filling a lot of these gaps. I really believe that's going to happen. There's a gap down to 440 and such, which I think we're going to fill. We could even drop lower than that. But don't worry, because I think that the second half of the year, what I think is going to happen is we're going to price in a recession very quickly. And then what's going to happen is people are going to turn into mega bears again. I think it's going to just be history repeating itself. Notice how people were so bearish, okay? Back in October, they were expecting a massive crash. And then what happened is they squeezed the market so hard because the market is manipulated, because we have election years coming up and all these different factors. So, with that being said, I know a lot of people look at the recession, the economy, and all these things, and they expect some kind of crash and this and that. Sure, you could be correct. But the thing is, the state of the economy is not the same as the stock market. The market ran really hard in 2020 and 2021. That's not the same as the stock market. The stock market ran while the economy was actually not in the best of places, basically. So we could correct for the first half of 2024. We could see some consolidation. But the second half, when everyone turns really bearish, I think there's going to be another short squeeze like this. I think it's still very possible. It's too far into the future for me to be like very, very confident when saying that because it depends on different factors. But I can tell you there's a good chance we're going to see something similar happen again, especially towards the end of the year where we got this massive squeeze. It might just happen again. If you look at how the market performed, especially going into like this year was bullish, a very bullish year for the markets. If you look at how we basically opened up, we saw the market basically kind of like trade sideways around this January period. It actually pumped a little bit. Then we saw SPY correct approaching March. Since March, it ran all the way until July, came down to October, then ran again. We could see something similar. We could see another drop during the first half, sideways price action, and a massive run for the end of the year, just like how we got this run here. They might just try to manipulate a lot of the people out there, a lot of the shorts out there, and they could just continue with that. But I don't really want to get too far ahead of myself. I think for the first few months of 2024, there's going to be some correcting that's happening. The market's going to correct a bit, and I want you guys to just be prepared for that. All right. So we're going to keep it very simple. I'm going to keep this video very short. I'll be talking more about the markets tomorrow in more details. But with that being said, thank you all so much for listening. Have an absolutely spectacular rest of the day, and I'll see you guys very soon for tomorrow's video. Have a very happy new year, guys. Thank you for listening, and peace out.